Thanks for tuning in to Countdown. I'm Neeraj Shah. With me are Devina as well as Navneet. And well, this market has made it a habit of giving us some surprises. Though not quite surprising the start of the trading day today. But right now, up about 1%, the Nifty Bank is leading the charge higher. So that's the other interesting bit. And we'll cast some eyes on the globe as well. But first, since our markets have recovered a bit of lost ground, start off with the intraday of the index, the Nifty or the Sensex, the Nifty Bank, whatever you show, will show how well we've recovered from the lows of the day in the session today. And courtesy today should go to select banking names. ICICI Bank, for example, let's cut to the chase. ICICI Bank is up about 5.5% in the session today, 346 and counting. There is strength in HDFC Limited amongst the financial names. There is strength in State Bank of India, which is up about 3%. There's strength in HDFC Bank, up about 2%. That's about a 60 or a 70 point move in the trading session today, after Bernstein came out with a report saying that they believe that the stock is headed much lower. So the market seems to be in a mood today. And particularly the NBFCs, I'm sure Devina will mark that at the broader end of the spectrum check. Navneet might have it at the FNO check too. But the NBFCs, by and large, seem to be doing reasonably okay for themselves in the session. That aside, Shree Cement up 4%. Remember, we spoke to the management yesterday. They didn't provide any much clarity, but just that almost everything seems to be doing well in the cement pack. So this one too is doing well amongst the premier players, I must say. And Vedanta and Hindalco from the commodity pack doing okay. What is not doing well, just a couple of names I want to mark. It is not Wipro as much, which is correcting. Wipro is actually very, very flat, and TCS, I reckon, has actually moved into the green. But HCL Technologies is down about 4% in the session. TCS, a really smart intraday recovery from the lows of the day, up about 0.5% in the session. Good afternoon, Devina.
Good afternoon, Neeraj. I just want to first quickly look at what some of the global markets are doing, and as an indicator to what trade could look like in the US. So the Dow futures and the S&P 500 futures also have seen a smart recovery from morning. In the morning, they were trading lower by 1%, and there is a recovery even in those futures. So the Dow futures and the S&P futures now trading just over 0.5%. Europe has opened up for trade. The CAC is trading higher by about 1.28%. FTSE 100 though marginal, actually a very flat move on that one. But the global markets also look to be a little more sane this afternoon. The breadth of the market is extremely positive. So you've got the broader markets outperforming the larger index. 1,128 stocks advance, 400 stocks decline. And to quickly run you through what individual stocks are doing out there, you spoke about the NBFC pocket, and that is a space of strength this afternoon. Aside from that, a lot of movement that you're seeing in real estate as a pocket. You've got infrastructure as a space very active. Ashoka Buildcon is up 18% today. You've got ITD cementation, with 1/3 of the construction activity coming back online now. All of these stocks are getting active, and cement stocks equally. You spoke about Shree Cement. So once construction picks up, once infra picks up, these are the pockets that are going to get impacted in a positive fashion. Indiabulls Housing is up 11%. You've got tire companies. Remember, we spoke about how crude oil prices impact, and all of these tire companies, be it CRB, JK Tire, MRF, all of them are up and active. You've got a Parag Milk Foods, which is up about 8%. Jindal Salt is up 10%, NBCC up 11%. A lot of moving parts here. Marksons Pharma 6.5%, Equitas Holding 6.5%. Overall Realty, again from the real estate basket, is up 8%. Godrej Properties, I think, is up about 4%, so that's doing well. Max India 7.5% higher. Ujjivan Financial Services, that too is trading higher. LIC Housing Finance. Housing finance companies all are active in today's session. You do have a few pain points across, so just want to quickly highlight the losers as well this afternoon. You've got the likes of a Hexaware, 5% lower. Sugar stocks, last 2 days have not had a good time, so down about 5% a piece for sugar stocks. And then a Magma, FinCorp, Container Corp, Piramal Enterprises are a few stocks which are down and out in today's session. But today is the weekly options expiry. Important to keep track of what's happening in the futures and options space as well. Good afternoon, Navneet.
Good afternoon, Davina. Yes, it's an important day and it's just the reverse of what we saw in yesterday's trading session where the start was in the green but the end was in red. And today we started off in red, but there was some buying which came on the dip. So that's some positive cue to take away. Of course, we can expect some volatility in last hour of trade. That remains to be seen. But as we speak, I believe now Nifty is at day's high. In fact, we've crossed the mark of 90.50 as well. So watch out for that one. The low today was about 88.21. So clearly, it's a recovery of almost over 200 points in today's session. In fact, Nifty futures have seen open interest build up of about 12 to 13%. The premium has gone up from yesterday's closing of 17 points to currently at about 30 points, which basically gives you it gives you an indication maybe intraday there are long positions being taken at lower levels. For Nifty Bank, we saw a lot of positions being added on the short side yesterday. It's muted in today's session in terms of open interest addition, but if you look at the recovery, that has been good because Nifty Bank is up about 2% in trade. It did slip below the mark of 19,000. It was at 18,700 was the low, and currently we're trading closer to 19,450. And the other good news is India VIX has cooled off on a day like expiry day when you do expect higher volatility. So India VIX is down about 5 to 5.5%. Moving on to what levels you can watch out for expiry or where can the expiry take place. 9100 call has seen significant writing today. Almost 23 lakh shares have been added, giving you an indication that the traders are expecting expiry to take place below the mark of 9100 today. And on the put side, we've seen significant addition coming in for the 8900 as well as the 9000 put strike. Both of them have added somewhere between 21 to 22 lakh shares respectively. My sense is that it'll be somewhere in the range of about 89.80 maybe on the lower side to now 90.50 on the upside. In terms of individual stocks, Indiabulls Housing, the NBFC space today has been buzzing. So that one is up. In fact, that's the top F&O gainer also of the day. We've seen the OI addition of about 20% coming in there. So fresh long positions are being added. And you've got something like Balkrishna Industries. Stock is up 4%, but you've seen significant addition coming in on the future side after a while. So 27% addition is telling you there are some positions being taken here on the upside. Then you've got Hero Motor Corp. The stock's fallen just about 2%, but there is some sign of fresh shots being taken at these levels. So these are a couple of stocks we are keeping an eye on. But besides that, of course, we've kicked off the earnings season. Wipro came out with the numbers yesterday. The commentary was weak, and they've refrained from giving guidance for the first time since 2009. But the other IT behemoth, which is going to come out with the numbers post-market hours, is TCS. The stock's off the day's low. It's trading in the positive territory. Let's go across to Agam Vakil to find out what the street is penciling in this time around. Agam, I think that street is factoring in COVID-led disruption to be visible even in TCS earnings this time.
That is correct, Navneet. Good afternoon to you. Well, in terms of expectations, we are likely to see dollar revenues grow around 0.5% sequentially. In rupee terms, that growth could be around 1.3%. Margins are expected to remain largely flattish at around 25%. And net profit could see a growth of around 1.2%. Now, when it comes to COVID, we must remember that it was essentially the last 2 weeks of March, which impacted all the companies across the globe owing to lockdowns, not only in India, but of course in developed nations as well, which is why we may see lower billings, which may to a certain extent offset the gain in the US dollar that we've seen against the Indian rupee. That said, despite the virus outbreak, a lot of analysts are building in and expecting TCS to report the largest quarter in terms of bookings for this. So that of course can turn out to be a positive. But it also carries a risk given it has the largest exposure to banking financial services, and that of course is also very dependent on the US and the European economies. Finally, what are we watching out for? The outlook in terms of the current environment, and the company has of course indicated 8% growth for the ongoing financial year, FY20. But what about the upcoming financial year, and of course and expectations on margins as well, given the kind of challenges that the company is seeing. But we may see a relatively better quarter as compared to some of its peers for TCS.
All right. Chairman, Agam, thanks so much for putting that into perspective. Need to get in some market perspective going as well. And I believe Ashish Kyal is with us in a bit. Brijesh Singh also will be joining in. Ashish, good having you. Thanks for joining in. A bit of a U-turn for the markets today, led by the two indices that we were thinking will actually take the markets down, IT and banks. What's the trade that you're initiating currently on the benchmark indices, Nifty or the Nifty Bank?
Hi, good afternoon. See, the overall trend that we are witnessing on the Nifty is actually a pullback. Post forming a low around 7,511, we saw the rise sharply, again a drop and again a rise. So I think this is nothing but a retracement. We are in a larger bear market is what I'm making out, and this retracement is going on the upside. So I would probably prefer selling on the rise is what we can see. Yesterday we saw a very sharp decline from the higher levels of 9,260. There was a serious decline below 8,900. And that shows how vulnerable we are. We can fall so fast that you will not even have time to think. So I'll probably bet on the short side, not on the long side. Any rallies towards 9,100, I'll use that as a shorting opportunity, keeping 9,250 as a stop loss and expecting a target of 8,900 or probably lower. As far as Bank Nifty, I think Bank Nifty has been very sharply underperforming. It has not even taken out 21,000 level, which Nifty has taken out the prior on that specific day. So that is a divergence between Nifty and Bank Nifty. So I would not prefer trading Bank Nifty. I would probably prefer trading Nifty. And if Bank Nifty breaks below 18,000, then I will start looking for shorting opportunity in this index.
Ashish, in light of that, then, if you're indeed larger position or stance is that this will get sold into and initiating shorts might be a better strategy, if at all, what are the stock strategies that you're taking today?
I am actually taking very specific stock bets. I'm not taking from the per se of the index perspective right now, because we are seeing a very strong outperformance within the pharma and the FMCG space. Pharma space has nearly given positive returns since the Jan top 2020, and that clearly shows when Nifty is down by 27%, pharma is giving positive returns. So my first take will be on the buy side is Aurobindo Pharma. And one can create long positions in the stock on any dips towards 530 levels, keeping a stop loss of 495 and expecting a target of probably 600 and eventually higher. The next buy is going to be on the Nestle. When the entire broader market has been way down from the lifetime high levels, Nestle is now touching new highs, and we can clearly see the momentum in the stock. So I would prefer buying Nestle over here at the current levels, keeping a stop loss of 16,395, and the target becomes 19,500 or probably higher over the medium term perspective.
Quick follow-up, Ashish, is on HUL. Since you bullish on Nestle and FMCG still is holding out, but HUL has had a fall intraday. How do the charts look here?
See, what we have seen in an HUL is nothing but the rise which happened over the past few days or weeks has been very sharp and fast. And given that fact of sharp rise, what we saw is a pullback. So these kind of stocks are in actually a pullback zone. These kind of stocks are not in the downtrend. So I would use any kind of a pullback in stocks like HUL or probably Nestle as a buying opportunity. So I would not be hindering towards shorting this kind of stocks, but looking for buying opportunity in NHUL. I think we should be able to make out easily 3 to 4% of up move from the current levels in this stock.
Well, that's the long and short of it. By the way, keep in mind that IT is playing out a very interesting piece today. And look at what Tech Mahindra and HCL Tech have done. And in the morning, we were talking about the weakness that we might actually see in TCS and Wipro. And Wipro in particular has bounced back, yes, but TCS too is in the green. And it's the other two which are in the red, the likes of Tech Mahindra as well as HCL Technologies. Actually, Infosys too is in the red. So the two which came out with slightly iffy piece of news are actually doing much better than the other three which haven't come out with the pieces of news till now. Maybe some bit of correction was already in the price for a stock like Wipro at least, but TCS has staged a pretty decent recovery as well. So that's the other thing that you have to keep in mind. By the way, just a couple of other things that I want to spot before we get into our next guest as well, and then we'll get in Vishwanath with his with a small story too. But just look at the move that we see in Motherson Sumi yet again. 77 rupees, 6 rupees higher in trade, 8% higher. So extremely strong move. And for all of you who heard the interview on BloombergQuint, if not, urge you to go on again. The management is extremely positive. They are actually, Devina, Navneet, they're actually going what Maruti Suzuki said, and they are saying that they are seeing the evidence in China wherein people are going out and buying cars firsthand. They do not, the customers in China don't want to use shared transport, and therefore they are buying their own cars. And the car demand in China, at least according to Motherson Sumi, will see a big zoom up, and you might probably see evidence of that in some of the other countries as well. And that's why they are very gung-ho about the numbers and everything looking okay. And maybe that is what is showing in the stock, Devina. 8.5% higher today, 77 and counting.
Yep. Motherson Sumi 9% right now, and we've seen the stock and the kind of news flow around it. So therefore, the stock remaining active on all the positive word that's coming from the management as well. And we've heard Mr. R.C. Bhargava also talking about the fact that post COVID-19, it's actually going to be a big turnaround story for the auto industry as a whole. So definitely they've had their fair share of trouble and fair share of pain, but it looks like this could be turning the page for the auto industry. Aside from that, Ashish, just come in on a few of these names. And in today's session, the activity that we're seeing within the real estate pocket, nonetheless a smaller pocket, but is there any name that you particularly like here?
See, within the real estate space is what you are asking. I'm probably not too optimistic about how the real estate as a whole is going to perform, because this is the sector which has been underperforming very drastically, not from now, from the long-term trend perspective. This sector has continued to be a major laggard. Also during the fall, what we have observed that NBFCs were already falling and there was already a lot of troubles early on. So both NBFCs and real estate, I would probably avoid something like DLF. If you look at it, any pullback in DLF is actually getting sold into. So these are the stocks that we should not be looking for buying opportunity, but as a trader, there is going to be shorting opportunities in this stock once Nifty confirms by breaking below the support level on the downside, maybe 8,900.
Okay. Shree Cement is the other active one. Yesterday also was up about 4.5%. Today also another 4% for Shree Cement. Management, didn't really put out a really, a grim picture. They did say obviously demand will get hit, but as soon as you see construction activity picking up, as soon as you see real estate picking up, as soon as you see infrastructure activity picking up, they're ready to go. So it's not about production, even if their factories are shut. Now, they're a cement manufacturer, so they can't really keep stock. So they have to go with the flow of demand. So as soon as the demand comes back in, they can actually go ahead and start production immediately. You feel within the cement pocket, any particular stock that you like, Ashish? Ramco, Ultratech, the larger ones, Shree Cement also?
Yes, see, within the cement space, there can be specific stock activity that can be witnessed. We can clearly see that Ramco Cement has been relatively outperforming and over the period of time. I'm not ruling out some consolidation or some base formation, but there is a possibility if the stock manages to cross above 545 level, then some buying might emerge into this. But again, that is from a short-term trading perspective. We might see a level of somewhere around 580 on the upside in a Ramco, provided 540 gets taken out decisively. On the downside, one can probably use a stop loss of somewhere around 500 levels.
All right. That's on the cement pocket right now. Just a few more names to watch out for. We spoke about how some of the housing finance companies are doing, and they're going pretty strong this afternoon. Ashish, you want to comment on the LIC Housing Finance, Indiabulls Housing Finance, or any other NBFC stocks that are active in today's session?
Yes, that is correct. So what we have witnessed, as I said, that NBFCs are the ones which have been major laggards in the entire fall, and we are not seeing, we are only witnessing a pullback. So a trader who wants to probably trade the pullback, they can look for LIC Housing Finance, relatively a better comparative stock compared to Indiabulls Housing, because Indiabulls Housing, we have seen how drastically it has fallen, and that has not moved anywhere in the past. So LIC Housing Finance, I think, can provide a good trading opportunity. We can witness some 5% move on this stock from the current levels. So one can look forward to accumulate LIC Housing, but only from a short-term trading perspective. We can expect it to go towards around 280 zone, but not from the swing trading or a positional trading. It might become a risky bet.
By the way, just want to mark some data points before we get in our next guest. Goldman Sachs, it came out with this very interesting note in which they have put out the data of trading bounces in the 2008 bear market for India. Okay. So they put out this data saying that in 2008, all of these are 2008 dates, from 22nd Jan to 5th Feb, it was a 10-day trading period. There was a 12% up move or a trading bounce in the market. Similarly, from 17th March to 2nd May, a 30-day trading period, there was a 16% up move from the lows in the trade in the markets. 11th August, 16th July to 11th August, 18 trading days, 21% up move. And 27th October to 10th November, 10 trading sessions, the size of the bounce was about 25%. All of these were bounces that happened in an overall peak to trough move of 60 odd percent. And that tells you that even in a bear market, there could be really large size pullbacks which could last for a few days. The one which lasted the one which was 16% from 17 March to 2nd May was a 30 trading day period, which is almost a month and a half, or a month and a quarter if you include the holidays. For that period, there was a bounce. People would have thought all is hunky-dory, and then it gave way. So you got to keep this in the back of your mind, that even large bear markets would have significantly large time-bound and price action-wise pullbacks that could happen. I'm not suggesting we are there. I'm not suggesting this is it. It could be, it could not be. But just keep this at the back of your mind. Past data throws up some very interesting viewpoints as well. And who knows what could happen in the outlook ahead as well. Devina, the jury's out. We don't quite know, but if Ray Dalio says that things are looking tough, you probably got to pay notice.
I think Gurmeet is also here with us. Maybe he can throw some more light on that. Gurmeet, great to have you with us. Good afternoon. And hope you're safe. In difficult times for everybody, but we have to focus on what lies ahead and how quickly one can pick up the pieces and move on. In light of that, then, which company or which industry, post April 20th, there are some leeways, but leaving aside Q4, probably leaving aside Q1 as well, that you would like to, take a look at.
So, I think, obviously, these are tough times, and, I've been making a point that, one needs to be very clear in terms of what he wants to buy with what time horizon. Neeraj was right that, some pullbacks can be deceptive. May not be true for the broader market, but could be true for, some of these sectors where the impact seems to be more, long term. Especially hospitality, hotel, anything to do with public mobility, including, the multiplexes and all. So one should just not take into account that, the consumer behavior will materially change, and it's difficult to measure that. It's that unknown we are dealing with. And so, it's important to stick to the domain you understand, where you see, some improvement, which is, and it's important to take into account the near-term improvement also, because that will set up the base for, broader things to come. So we are currently looking at, three spaces in terms of, nibbling in as and when. So not going all in even in those three spaces. One is healthcare, which we very briefly discussed. So India with 18-20% of the global population, the representation in pharma in terms of market cap is hardly 2%. Our entire healthcare, which includes pharmaceutical, hospitals, diagnostics, everything, it's a $100 billion industry compared to $3 trillion plus for US. So not the right benchmark, but I'm just telling you that how secular of the healthcare story could be for next 5 to 10 years. You will see government expenditure going up, materially, in this particular space. Also, if you see, compare Nifty Pharma with the benchmark index, it's outperformed it for almost for the longer period till 2015-16, and last 3-4 years have been just coming off from a low base despite the current run up. So we are advising selectively to get into an healthcare space. While we like Divi's, IPCA, some of the MNC names, we also like some of the funds, because some of the funds in India give you an opportunity to even participate overseas, especially the couple of fund houses which buy the medical devices companies which are in US, and the correlation between the healthcare index and the medical devices is hardly 0.1, 0.2%. So it's very important right now to look at whatever you're buying, what is its correlation also, and not just chase, meaningful return. The other space is obviously selectively looking at consumptions.
Gurmeet, stay on with us. We've also got a management online, and in these difficult times, some positive news coming in. A lot of these companies are reopening their plants, and one of them is Pratap Snacks, which has started job work in their manufacturing units based in Uttarakhand, Maharashtra, as well as Haryana. The operations there have started, and we're joined by Amit Kumar, who's the MD and CEO of the company. Hi, Amit. Good afternoon, and thanks a lot for joining us. Tell us, of course, all these companies we've been chatting with, they are facing supply side disruption as well. Since you're starting off with these 3 plants, is everything in place with regard to labor at the plant and with regard to, the touch points with your distributors as well? Is the transportation in place?
So basically, if you see what has happened in last 21 days lockdown, the conditions were very severe in metro towns, but they were little bit ease off in the tier 2 and tier 3 cities. So almost all the stocks in tier 2 and tier 3 cities have been vanished. So the inventory is very, very clear that side. But if you talk about the supply side, all the suppliers have taken permission from their respective offices and have started production. There is some problem of transportation to get raw material into the factory and pushing the finished goods outside of the factory, but it will take some time. Things are definitely easing off. Out of the 14 plants basically where we operate, we have taken permission in few plants, but we still await permission in our 2 major production facilities, one at Indore and the second at Guwahati.
Okay. Amit, you're suggesting you're well equipped to resume operations at all your plants once you receive permission?
Definitely. To some extent. Not 100% extent, but probably we can operate at 50, 60, 70% capacity, because all the permissions are coming with 30 to 40% labor you can take inside. You have to do social distancing, you have to maintain a lot of hygiene. So considering all the facts and getting labor also from the market, it won't be that easy. So we are planning to operate at probably anywhere between 50 to 70% capacity once we get permission from the government authorities.
Right. We've also seen, of course, you've said that the previous inventory has already been cleared because of high demand coming in for essentials, be it from the FMCG space or in your matter related to eatables too. Are you able to meet that demand? And we've also seen a scenario where a lot of these companies, because of the crisis we're going through, they've tweaked prices. And when I say they've tweaked prices, they've cut down prices so that it's affordable for the consumer as well. In times, as you're suggesting, the majority of your exposure is in tier 2, tier 3 cities. A lot of these daily wages, they're not able to, of course, earn their daily earning right now. Have you re-looked at your pricing in the recent past and, of course, in the last 20 days?
We are already a value brand, so we definitely give a lot of values for the consumer. The biggest problem has been basically supply of our goods from factories to other distributor points and access points, which have started a little bit. We have got permission of supplying stock from our factory in Indore and Guwahati. But unless and until we resume production, it would be very difficult to fill the gap in the market. But we are a value brand, and I think it's majorly what we sell is a 5 rupee product. More than 80% of our sales is in 5 rupee category. So it's a good value to the consumer.
One last. Sure. Just one more question. Since you said you're looking to open the other facilities, what about the staff there with regard to salaries, your fixed cost? Are there any working capital issues that you're facing right now?
So we don't have any working capital issue right now. Our fixed cost is comparatively much lesser than the industry. Our fixed cost compared to the normal revenue, what we do is only 6 to 7%. And we have enough cash available with us. So we don't see any problem in working capital or the fixed cost expenditure as of now.
Just to get a sense from you, Amit, and one last question on this conversation. How do you see all of this impacting your financials for FY21? This was a period where everyone's FY20 targets got thrown away. But for 21, do you feel yourself coming back on track at a faster pace or any further implications that can get prolonged?
So the plants have been shut since March 25th, and we anticipate that we will need at least another fortnight to get the remaining plants operational. So as we resume in a phased manner, some of the plants would have been shut for about 3 weeks, while others may be shut for 5 weeks. It's a bit early to estimate impact on revenues, but our monthly run rate was 100 to 110 crores of revenue up to February 2020. However, even in the face of lockdown, many of our super stockists and distributors were able to distribute the goods, so the pipeline inventory was being sold in the market, which will definitely help to mitigate part of the impact on revenues. Most importantly, our biggest advantage is that we enjoy lower fixed costs, which I mentioned before also, at only about 6 to 7% of the revenues. But given the extent of operating leverage, our variable costs too have reduced significantly, which has provided significant buffer to our operations. Further, we have a robust balance sheet with surplus cash balance and no borrowing, so no impact on finance cost. But on the revenue side, there would be impact, but how much would be the impact for the year is very difficult to judge right now or predict right now.
Okay, got that. We wish you all the best, Mr. Kumar. Thanks very much for taking out the time and joining in. Pratap Snacks there have started production at some of their facilities. Say the impact could be limited because they had a lot of already, they had stocked up with their dealers and distributors. So all of that pipeline started getting cleared out in this lockdown period, but it's still going to take some time before they can really assess the overall damage, and another 15 to 20 days to come back on to full capacity. Just to come in, Gurmeet, now on some of these FMCG companies, while staples, you may anticipate, the necessities and therefore the volumes staying stable out there. Do you feel that this will reflect well for them in their earnings performance and even as we step into the next fiscal?
I think would be erroneous to paint all the FMCG companies with the same brush. I think anybody with dominant share of soaps and disinfectants and fabric wash, maybe a bit of hair care and processed foods will have obviously a bit of a leg up. Our pick remained Dabur, Britannia and Varun Beverages in this space. Dabur obviously has now run up since the last time we spoke, from 400 levels to now 500 plus levels. Still continues to be relatively better. So if you buy today a Lever or a Nestle at 60, 70p, then chances are you will either see a time correction or an FD kind of returns, from a long-term perspective. Right? Momentum can give you, some upside in the short run, but that's not how you construct a portfolio in times like these. If you have to seek hiding places, I would rather go for bonds and liquid and arbitrage funds rather than look at 60, 70p stocks. We've seen it's a humbling experience for advisors and portfolio managers that once you buy growth at any price, and in this kind of environment you take big drawdowns. So I think the one space I like the beverage space. I think it's a peak of the summer season. Varun Beverage did very well last quarter. I think they are on course to probably hit 500 million plus cases. Their product mix is pretty good. The juice segment seems to be doing very well. All the capex and all are behind now, so that South and West territories will add value. So that looks good. Britannia, again, as I said, 77% is biscuits. Within biscuits, the cookies, which are apparently high margin amongst the plain biscuits, cream biscuits, and there are three categories there. They're clearly the revenue leader. Volume leader is obviously Parle in plain biscuits and cream biscuits. And the other segment, which is Rusk and dairy, also seems to be doing well. There will be some milk inflation, some supply side issues, but those will be addressed, over the next 2-3 months. So that portfolio to me looks better vis-a-vis buying, some of the MNC names at 60-70p.
Brijesh Singh also joins in right now. Brijesh, good afternoon to you. We'll come back to your index view in just a bit, but since we're on the topic of stocks, can you run us through your stock calls for the afternoon?
Good afternoon, Devinath. There are two calls, both of the buy sides. Number one is ICICI Bank. Right now, it's been quoting somewhere around 343 around. So keeping a stop loss 338, one can look out to buy for the target of 358. Time frame to hold the counter would be a couple of days. And another call would be a GAIL. 89 and a half the stock is been quoting. When I posted that time it was 89, but the present rate can be used to go long. We can modify the stop loss from 87 rupees 50 paisa to 88 rupees and play for the target of 92 to 93. Again, the time frame to hold the counter would be 1 to 2 trading session.
Okay. Stay on, gentlemen. It's time now to take some viewer queries because they're coming in thick and fast. I want to take a query from Yashovardhan Maheshwari. He wants a view on NOSIL. You want to come in on this, Gurmeet, if you track NOSIL?
Sorry, Devina, sorry, the audio line wasn't clear.
Do you track NOSIL and do you have a view on this one?
No, we don't track that, unfortunately.
Okay.
Devina, if I can, I just reading a report on NOSIL, and there's the report from Ambit Capital seems to suggest that specialty chemical companies with an exposure to autos might not be the best place in the current scenario compared to agros, and therefore Ambit Capital at least was not too gung-ho on NOSIL as a stock. Just thought we'll fill in this fundamental perspective since Gurmeet doesn't track it anyways.
Yep. So maybe, getting a quick technical call. Brijesh Singh, do you track NOSIL?
See, even looking at the weekly chart, the stock has been trading with lower tops and lower bottom formation. And what Neeraj said, I'll go with that thing only. The charts are not looking promising. Still, someone wants to hold, keeping a strict stop loss of 70. Use rise to go to exit the stock. The higher side resistance lies somewhere around 85 rupees, followed by 90 rupees. So 90 is a tough target to be crossed. So use rise to exit. There are other chemicals company where one can invest in it rather than going for the NOSIL.
Okay. Arun Ramchandran wants a view on PVR and IRCON for 2 to 3 years time horizon. Gurmeet.
Obviously the price correction has been material. I think we'll have to see how this space evolves because it's difficult to predict the consumer behavior. How much time he will take to get back to the multiplexes. But assuming the various discussions we are having with some senior people in industries where there's work going on and changing the layout, keeping more spaces. There could be instant testing machines, which would come in handy. So I think it's better to have a wait and watch approach. PVR also has some debt on the books. You will see a lot of things panning out in terms of the fixed costs they have. But if you see another 10, 15, maybe 20% correction, you might want to maybe start adding it with probably a slightly longer term view. But the better idea would be to just wait and see how much time does it take people to really get back to the public places and the malls. I think that to me will be the key. Also, if you see the box office collections will be down because there are no releases. Occupancy we did not speak because the malls are shut. The ad revenues will be down. So all the three revenue streams, which is the net box office collections, advertisement revenues, the F&B sales, nothing is working. It's on a standstill right now. So just wait for things to open up, and even if that means buying it 10% higher, it doesn't really make a difference.
Rajesh Singh, last quick word on Avenue Supermarts. Anand Kumar wants to know what's a good level to enter the stock.
See, as a disclosure, we have recommended to our client, first of all, regarding with the Avenue Supermarts, for the long term it's been concerned, then I would be suggesting 2000 or say 1950 to 2000 is a level where one can go for a buy side with keeping a strict stop loss of 1600. And if someone has a view of 1 year or say 1.5 year time frame, then the chances are that stock might retest its previous swing high of say 2500, or even chances are that 2800 can be seen, but only on the long term and with keeping a strict stop loss of 1600, not at the present rate, buy below 2000 only.
Well, so those are the viewer queries, and viewers, thanks for writing in. We'll try and take as many as we can, 3 or 4 during the course of a trading day. I must say, just look at Motherson Sumi. What a beautiful move that one is now. 13% higher, 80.4 on the stock and counting. We already took Ashish Kyal's view there. But Gurmeet, you gave a splendid call a few days back when you joined us, mentioning to buy into some of the auto hangs. Motherson is not the only one. I think Bosch has done reasonably okay for itself. Some of the others are moving up. Would you, and we spoke to Motherson and sounded very confident, the management, about demand returning back. Where is it that you are more comfortable putting a bet on if you are still buying into an auto hang?
So, Neeraj, I think everything is moved up. Even Maruti from 4,000 levels to 5,000 levels, Bajaj Auto from sub 2,000 to 2,400 levels. I think, my view is that, and we have discussed that the personal mobility is in for a structural change, at least in the near term, which, I think in our discussions, even with the market team that came out, I think in the immediate term, people would prefer to use, personal vehicles and conveyance over public transport. And I think that would, and also sector is going through a bit of a rough patch. The BS4 issues are hopefully behind. There's so many issues the sector got plagued with. My view is auto sector from a value proposition over the long term looks very attractive. We'll have to see how. I think I will not touch commercial vehicles right now because that's one space which is probably the worst impacted. But I can, continue to nibble in with two-wheelers and four-wheelers names. I would prefer Bajaj and Maruti, more cash-rich companies. They've seen various cycles. The management has the ability to tide through these times. Bajaj Auto in particular, I like the product mix. I think the work they are doing on the electric scooters is quite commendable. The export markets also will open up for them, so more diversified. So I'm actually constructive on auto, and probably will take a 2-3 month view to investing on a gradual basis. Amongst names like Motherson and Minda, I would probably prefer Minda Industries right now, considering the price corrections. Obviously, Motherson Sumi from 150 to 60 also saw material correction. Also, we see the product portfolio, Neeraj, on Motherson Sumi, since we were discussing that. It's your rear view mirror and the other products which they specialize more in. So my view is that go for more content per vehicle kind of themes over the long term. Tactically, yes, if something has fallen 60-75%, probably can give you a little more pullback. But over a more long-term basis, go for more players who are more content per vehicle kind of a zone rather than just Motherson Sumi or Bosch in that space.
Okay, that's the view on some of these. Now, a BloombergQuint exclusive. The Future Group has approached banks for restructuring of the debt on its books. Vishwanath Johnson with more on this exclusive story. Vishi, what are you learning?
Right, Neeraj. So as you said, yes, Future Group has approached its lenders for a debt restructuring. About 7,500 crore of debt is looking to be restructured. The group is seeking that the banks extend the repayment date by about 5 years. Now, the idea behind this is that the company has been facing, various companies within the group have been facing considerable financial stress for a while now. The decision to approach bankers for restructuring happened before the national lockdown was announced back in March. But since that has been announced and the companies within the group are already facing a considerable amount of stress, people are not actually going to their stores to buy things. So because of which, of course, that stress has sort of increased. Now, the idea behind debt restructuring is to get more time to repay the debt. Plus, of course, alongside that, the group is also looking to monetize some of its non-core assets such as Future Generali as well as Future Mall Management. There, the idea being that once you sell off some of these non-core assets, then of course you decrease the amount of debt that is there on the group's balance sheet, but also bring in some equity that can be then diverted into the retail businesses of the group. As of now, this is still in a conversational stage. The final plan is likely to be submitted some point in May when the lockdown will be lifted and people can actually come back and try and get the plan in order. There's also the process of due diligence which will have to happen for the non-core assets which are looking to be sold. So all of this is going to take some time, and hopefully at some point in May, as we understand from our sources, the group will submit the final plan to the lenders, and of course then the process can move forward.
Vishi, we leave it on that note. Appreciate you joining us and taking us through those exclusive details with regard to the Future Group. But I just want to turn attention to TCS. Remember, the numbers come out post-market hours, and there is some heightened trading activity which has just started in the last 5 to 10 minutes. When we started the show, remember, we did a preview. The numbers are expected to be weak. The that time the stock was trading very close with gains of at least 1%, and now it slipped into the red. It fell by about 1.5%. Some marginal recovery seen from those lower levels, but the stock has turned weak. Ashish, I want to come to you first with the technical check on TCS and the options. Of course, they become pretty active of these IT companies just before the numbers. Looking at the levels and also considering the numbers come out post-market hours, would you advise any trade to be taken here?
See, on TCS, if you look at it, the overall, it's moving in a very broad range of 1870 resistance on the upside. And on the downside, there is a support around 1650. And this has been going on for many days now. It has not moved in any of the direction. So I would rather not bet on it right now when it is in consolidation, but would wait for it to either take out the upper end of the level around 1870. That will give a very strong positive break, or probably to move below 1650. So if the numbers come out and tomorrow we see a gap up above that level, then probably it will be an indication that the third or the C leg is starting on the upside, which might take it towards the 2000 levels. So I'm going to keep a close watch on these levels.
So watch out for those levels in TCS. It's a heavyweight also, by the way, on the index. So it's an important number to track as well. Gurmeet, your thoughts on IT, Wipro, of course, disappointed the street. Well, the commentary was pretty much, weak. They said they are seeing pricing pressure, budgetary cuts are there, and restructuring request cuts are also there with regard to discretionary spends at the company. But within this fact, TCS, of course, it's still expensive, 20 times, in fees 15 times, and you've got then Wipro and HCL, which trade somewhere about 10 to 11 one-year forward earnings. All of them have fallen this year. Would you take a bet anywhere, considering the currency is depreciating?
See, again, I think a lot of contracts would have got renegotiated. A lot of them would get renegotiated in this quarter. So we'll have to be a little more patient with the IT pack, and we'll have to probably see the go vertical wise. So TCS off late, if you see some of the verticals which saw strong growth were insurance, where it witnessed growth across geographies, both including continental Europe, Australia, and the rest of the world. It also gained some 200 to 50 basis points market share over the peers, other than the deal momentum. Also, the communication vertical group, obviously led by digital investments in analytics and other spaces, especially verticals like CPG, travel, and hospitality, did very well for them. Which probably has now a cloud. We have to see how BFSI reacts, because that's a dominant part of the. So I'll be neutral right now, because, as I said, the four key verticals, which are your BFSI and manufacturing, retail, and others, I'll want to see how the contracts are renegotiated, or how they will get in terms of guidance. Also want to see the hiring front, how does that number pan out? I mean, how does the headcount, is reducing materially or not? So bit neutral right now, and on a wait and watch mode as far as the IT pack is concerned.
Okay, so that's wait and watch for the IT pack. You got some heavyweights here, and more than anything, I guess Infosys is the one which is corrected the most within that pack. Okay, and for markets, it's okay, we're just around the mark of 9,000. So since the time we started the show, I think we're off 50 points. But pull up PVR. Remember, in the second half of the session, just towards the closing, PVR ran up in trade. And today as well, I guess it's at day's high right now, sitting with gains of 7%. Brijesh, you want to come with a technical check? I was looking at the data yesterday also post-closing. There were some signs of longs being added at these lower levels. Would you take a bet? Do you think it's bottomed out?
See, Navneet, for a short term, definitely it has bottomed out, and the stock got corrected from a level of roughly around 2100, and it made a low of 950, and after that it has moved up. And the oscillators on the daily charts had made the double bottom formations, and they were been trading in the oversold zone. Now they have come out from that. Even the candlesticks patterns are indicating for the upward journey can be seen for a short term time frame. Now there are two important levels to be watched for this trading back. One is 1060, and another important level would be immediately somewhere around 1120 around. So keeping a stop loss of 1120 present at any dip till 1151 can take a long position in it and play for the target of 1255 followed by 1310.
Those are some technical levels to be watched out on PVR, and we were surprised that Infosys has still not declared its earnings date. Remember, this was the first company which used to kickstart the earnings season. I think they've announced that they will be declaring their quarter 4 results on 20th April at around 3:45 p.m. All right, but it's time for us to get you the dealing room check, and as usual, we've got our research head Darshan Mehta joining us. Hi Darshan, good afternoon. What are you gathering?
Good evening, Navneet. I think one of the stocks that is in focus today is Bharat Forge. A couple of domestic funds are accumulating. If you see the volume for the past 2 days, they have been moving up. And the other reason is the big surge that you saw in Motherson Sumi. So that is up almost 25% in the past 2 days, while Bharat Forge hasn't moved up significantly. So dealers do believe a catch-up trade is quite possible in Bharat Forge. The other one is, if you look at it and wondering why the entire NBFC space is doing well, so you're having counters like an Indiabulls Housing Finance or a Chola or an L&T Finance or an M&M Financial, all of them are buzzing in trade. Some of the dealers do indicate that one of the key reasons why Indiabulls Housing Finance and the others have seen a surge is because there is a buzz of a potential NBFC package coming in for the sector. So that's something that is being awaited for. And Apollo Hospitals, for one, is doing well in today's trade. Dealers indicate that the buyer today is a large foreign fund which is accumulating. So that is something that dealers are watching out for.
Darshan, thanks a lot for that. And remember, most brokerages post the extension of the lockdown, have in their reports stated the possibility of another package of sorts that the government needs to put out. Maybe probably putting the fiscal strain aside for a moment to make sure that they bring the economy back on track, and they need a much needed fiscal push along with the monetary stimulus as well, which has been coming in. And again, now another 25 basis or points in June is anticipated. But for the NBFC space, if this definitely is going to be a positive, it comes about in form of any sort of a package. But within the NBFC pocket, across the board, Gurmeet, what space, what stock is it that you like? Do you like these housing finance companies? Do you like consumer finance? Do you like any of the other gold financing companies as well? Muthoot, Manappuram, what do you think about all of these?
The joke in the street is that every growth stock has become a value stock, especially in the financial space. Last 10 years, obviously, the prices, the re-rating multiple. So there are two concerns. One is an existential crisis, which I think is a little overblown in a lot of counters. I don't think so. NBFCs with better capital adequacy ratios, good parentage, will cease to exist. So a Bajaj Finance or some of the down south names, which is Sundaram or a Chola or NBFCs with great parentage, including L&T, Tata. I don't think that there's an issue there. I think probably the market will test some of the maybe AA and below rated issuers. And I'm a great believer that the bond market is the best signal, a buy signal or a sell signal on the NBFCs. If you recollect, DHFL, about 8 months before the default, the NCD started trading at 12%. And one of the fund houses who sold it got a lot of flack for selling a AAA paper at 12-13% in the secondary market. I think right now you see a host of NBFCs giving you double digit and some of the mid-teens, AA, A minus, A plus rated NBFCs, the quotes in the NCD market. To me, that's a dangerous sign. And unless and until we see a comprehensive release package, liquidity crisis for some could turn into a solvency crisis. So my view is that restrict to the top premier guys who are able to still borrow money at relatively better yields, and the debt market is open for them. So I would stick to Bajaj Finance. I would stick to something like an L&T. I would stick to a Chola. I would not go right now, dial risk in tier 2 right now. Tier 3 is definitely out of question, which are stressed. So I would wait for the bond market signals to get in. But if I were to today pick one or two, I would pick maybe Bajaj Finance and obviously HDFC Limited.
I just want to view, Ashish, if you're here with us, a quick comment on ITD Cement. I mean, it's a smaller stock, but up 15% in today's session. It probably is the case for all of the names within the cement basket. But do you like anything from this pocket? And in particular, do you track ITD Cement?
Yes, see, if you look at ITD Cement, the stock actually made a low somewhere in the zone of around 28 rupees, and from there it's now at 42. So what we are witnessing, all of these stocks are showing a very sharp up move. In terms of percentage, yes, they have gained very sharply, but if you look at over the period of 3 or 4 months or so, they have fallen nearly around 60, 70, 80% of the fall, and now they are trying to catch up to some extent on the upside. So over short term, yes, I'll play on the buy side for ITD Cement, given the fact that there is a very strong momentum in the final hour of the close, and we are seeing a very strong bullish candle forming. So it can go towards the level of around 46 or 47 on the upside. So that's a buy. On the downside, the stop loss has to be kept somewhere around 38 levels. That's a little far away, but you have to give a leeway for volatility. But that is only strictly from short terms, because post this wave B or wave 2 completion on the broader market, we'll start seeing the third or the C down.
By the way, speaking of bullish candles, there are a few on the Bank Nifty maybe, and Motherson Sumi is up about 15%. That's 2 days of a massive up move. But I just want to keep in mind, viewers keep one thing in mind before we get in those closing strategies. The rupee is at 76.87 now. We're very close to the 77 mark. I don't quite know if we hit it today intraday or no, but we're certainly very close to those levels. Nevertheless, let's get in closing strategies first. Brijesh, to you first, your top closing strategy.
Neeraj, there are two calls, one on the buy side, one on the sell side. I'll start with the sell call first. Piramal Enterprise is looking weak, so the future rate somewhere is quoting at 898 or 900 level. So one can go on a sell side with a strict stop loss of 910 and play for the target of 875. And another call is Motherson Sumi definitely is looking good on the chart. Volume breakout has been witnessed somewhere around 81 rupees 80 paisa around the stock has been quoting. Present rate can be used to go long with the stop loss of 78.50. Play for the target of 84.5 to 85.
Ashish, what about you? Your top closing strategy?
The first one is going to be Biocon. Again, we are seeing a very strong up move in Biocon. It's probably the third wave which is ongoing, and that should continue for some time. I think the pharma will outperform. So Biocon becomes a top pick. One can buy at the current levels, keeping a stop loss on the downside around 330. And then we can expect it to go somewhere around the zone of around 375 levels on the upside. And the other stock is going to be on the short side is going to be DLF. We can clearly see that DLF has been just moving in a range, and as soon as market starts showing weakness, DLF will be the first one to start falling on the downside. So probably short DLF, keeping 150 as a stop loss, expecting 120 or lower levels in this stock.
I must say, while Piramal is the sore spot simply because almost every other NBFC is doing well, every other pharma company is doing well, this is a mix of both, if you will, and it's not quite doing well. So certainly lower. Look at all the other NBFCs, even the small size ones or the mid size ones, the L&D Finance, M&M Finances of the world doing very well. But the one that I want to mark is Jubilant Foodworks, 1517, up about 7% in trade. IPL getting postponed. The news came in yesterday. Today, some news about how a pizza delivery boy was infected and therefore some multiple houses quarantined. Any kind of bad news on social media or otherwise, Jubilant doesn't quite get impacted as much. So, well, doing rather well for itself. Gurmeet, one quick thought. We speak about Jubilant enough. It's doing very well. What about Westlife? Would you buy that because that's the cheaper cousin sister, if you will?
My view is that there will be a near-term impact on these prices in light of the events around us, which you just mentioned. I think all the contactless delivery and others, in one event, and it can certainly create a big sentiment. It could be a big sentiment damper. So you have to look for real bargain. And these stocks are not cheap. Jubilant even at $1,500 is clearly not cheap. So I think, and so my view is that again these are 40, 50, 60 PE stocks. Jubilant market cap is about 20,000 crores. From 18, 1900 levels, probably we've seen a 20% correction. My view is to wait it out. Just see how wait for things to normalize. My view, it will be much quicker than what most people think. And if you want to really chase discretionary and consumption space, if I were to club them into one category, maybe start looking at some of the appliance makers. I think I was recently reading a report of Kotak and the Indian Cellular Association. There are lakhs of appliances which are due for replacement and service repairs. Same goes for mobile phones. And this is probably one event which will probably increase the need for consumer appliances and automation. So, good players who are into consumer electronics, white goods, seems to be better placed from, again, as I said, more from a long-term perspective. Something like a Dixon, some of the good white goods makers, including Voltas and all, I think are better long-term plays in my view.
Gurmeet, since you're suggesting to stay away from discretionaries, I was just looking at Titan. That's at days high, and of course we know they've already given their quarterly update. But the stock started to recover now, and it's up 3.5% to 4%. It's a cash-rich company. I don't think there'll be any issue with the cash flows. But you've also highlighted stay away from these expensive stocks. This one too trades at 45, 46. I'm assuming, is that also a no? One should not look at Titan.
Again, neutral. As I said, look for some real bargain deals. I mean, obviously you would see 1,300 becoming 900, and there is an urge to buy. But you rightly pointed out, at 57 on the trailing 12 months, probably it's 56, 57 times still. So I'm just saying that still has 90,000 crore market cap. If you see the growth drivers for them, was the wedding collection, and the range they had in both the and even down order with 16, 18 carats, which is the Nia range, right? One strength of them is that Golden Harvest scheme because, almost, there are various numbers that don't really come out with official numbers on it, but channel checks indicate that the 40-50% of the buying happens in that Golden Harvest, which is the SIP form. You give 11 months and the 12. So that can give you some cushion. I don't know how much would be the inventory gain looking at, the advanced hedging strategies they follow on the gold prices. Still expensive in my view. Maybe I don't want to quote price here, but maybe at 700-800 if you get it. Probably that's the time to get in. You have to wait for bargain buys in these rather than just simply go for 20-30% corrections.
Yep, Gurmeet, take your point there. Thanks a lot for joining us and taking us through your views in the markets, and stay safe. Just a few minutes to go, by the way, for markets to shut shop, and we've been highlighting how these NBFCs have been doing well. Ashish, you want to come on with Ujjivan and Equitas? Both F&O stocks are doing well, up between 8 to 9%. Any trades do you see here?
Ujjivan, I think, is quoting somewhere around 169 levels right now. So from the short-term perspective, yes, we can expect it to go towards, say, 176 or 177 odd levels. And on the downside, the stop loss has to be kept somewhere around 155. So that's a very short-term call. And one has to keep a very strict stop loss in the current market scenario because we are seeing very fast reversals as well. As far as Equitas concerns, again, a very similar kind of a pattern, moving in a broad range. So maybe if it can manage to take out the resistance of 43.50, which it is failing to do so for quite some time, that's going to give a very strong breakout, and then we can expect it to go towards the level of around 48. On the downside, the stop loss has to be kept at around 38 levels.
Okay, gentlemen, Brijesh as well as Ashish, thank you so much for joining in today and giving us your thoughts. Really appreciate your time. Well, let's start wrapping up the markets, and we are ending about 0.78% higher. So actually, it's a pretty good close. And the Nifty Bank up about 2%. I must say, banks and NBFCs both have done remarkably well. I don't know if they're anticipating something that the market doesn't quite know about as yet, but doing very well. But having said that, let's talk about the individual movers. NTPC 6.5% higher, 3 days of 7-day move, nearly 18%. So it's not just today's up move, but it's done rather well the last few days. Top gainer today. Vedanta and Hindalco then chip into an extremely strong moves the last couple of days for Vedanta. ICICI Bank about 4.5%. SBI about 3.5%, so good going there. IndusInd Bank also brings up the list of gainers today on the banking side. And then a couple of FMCG names include the likes of Nestle India, which is up about 2.5%. And by the way, speaking of consumption, Titan 2 is done well. And HDFC Bank closing in nearly at the day's highs. What's not doing well? HCL Tech 4% lower. Kotak Bank about 3.5% lower. Bharti Airtel has ended nearly close to 500. HUL corrects a bit in the session today. And Infosys will declare the results on Monday post-market hours, and that stock is down about 2.5% in trade. Navneet, what about the broader end of the spectrum?
Neeraj outperforming the frontline indices once again. So you got mid-cap index, which is up about 1.5%, small cap gaining nearly almost 3% in trade. Good going there. Market breadth has been positive throughout the session, and you've got the volatility index. I think it's closing somewhere about 45 to 45.5, down almost 8%. So that's a positive sign. But in terms of individual gainers, you've got Ashoka Bilcon, which is closing with an upper circuit of about 20%, and I think it started to move higher in the last few minutes of trade. Indiabulls Housing is up about 20% too towards the end. Motherson Sumi has been doing well. It's a beaten down stock, but it's recovered quite fast in the last 2 or 3 sessions. L&T Finance Holdings, another NBFC, which surged about 15%. Construction company ITD Cementation went up by about 14 to 15%. And you had stocks like NBCC, which was up in trade, and PBR, secondly on the trot. And this one also up about almost 7 to 8% in trade. JK Tyre, I want to highlight all the tire stocks actually went up. JK Tyre, I highlighted Balkrishna in the F&O check where long positions was even Apollo Tyres was up and about today. So as a pack, this space also did well. On the losing side, you had Balrampur Chini, which was down 5%. Hexaware, of course, these IT stocks did not have a great session today, so that was down 5%. DLF fell about 4% in trade. You had stocks like Brigade Enterprises, Piramal Enterprises, both of them were down, alongside United Spirits too, which was down about over 3% in trade. But in terms of contributors among the Nifty constituents, Davina, I guess Kotak Mahindra Bank has been weak in the last 2 or 3 sessions. Today also it was down.
It was down today, and the other one was actually IndusInd Bank, which Neeraj was highlighting. So yesterday's bulk deals, if you had a look at that, Goldman Sachs picked up about 0.65% stake in IndusInd Bank at a price of about 430. So, that is something that's probably, kept the stock active as well. Nonetheless, the mood of the market and the rest of the banking pack itself is up. So, the point contributions, ICICI Bank leads the way. You've got ICICI Bank, which has contributed about 25 odd points. HDFC Bank contributes about 22 odd points. Reliance Industries 17 points. HDFC Limited 14 points, and L&T another 8 points. So that's what you've got in terms of the big contributors on the upside. On the downside, the drag, like you said, Kotak Mahindra, Infosys is dragged, HUL is dragged today, so that MSCI buying now gets pushed in the backdrop. 7 odd points low for HUL. Bharti Airtel and ITC were some of your bigger losers. So yesterday's FMCG outperformance gets subsided in today's trade. The breadth of the market really positive. So you've got about 1,151 stocks advancing with a decline of just around 53 stocks. So that tells you there is some active buying that's happening within the broader market space. And today is the futures and options, weekly options expiry. So you are going to see an elevated number in terms of the overall turnover in the futures and options space. But again, the last few days in the cash market, the turnover has been really strong and really encouraging. So yesterday we saw turnover, NSE cash closer to about 64,000 odd crores. And in today's session as well, the equity cash market turnover on the NSE is pretty strong. Right now it's about closer to 49,900. So it seems 50,000. So it seems like it's really graduating on the upside. And for the F&O, it's about 19.5 lakh odd crores. But, that's what we've got in terms of the market coverage on Countdown this afternoon. Just want to quickly look at a quote that we're getting from Goldman Sachs. They put this note out and they're talking about India valuations. They say we lower India to market weight within Asia on delayed recovery and extended valuations, with a Nifty target of 9,600 by June 2021. So the earlier target, I think, was 10,800. From that, they brought it down to 9,600. We raise infotech and defensive sectors of staples, telcos, and healthcare to overweight on higher earning resilience, and lower select financials and domestic cyclicals to underweight. So keep this in mind. Goldman Sachs is now getting India down to market weight. But if you want to take a more broader approach and want to know what exactly is that foreign investors are advised to do, you have to listen to what Ray Dalio had to say. Central banks will do anything to keep the system going, but investors should not only go by what they are buying, says Ray Dalio. Speaking to Bloomberg, he says that the decision to stop buying corporate bonds may happen suddenly. Listen in.
Some critics say it's wrong for the Fed to be in the market buying corporate bonds, buying investment-grade bonds and buying junk bonds, as opposed to what they used to do, which was treasuries and agencies, because it's picking winners and losers in the real economy. What do you think?
I think everything is a matter of weighing the pros and the cons. And what happens over a long period of time is that whoever steps into the job inherits that which happened before them. And then they deal with that thing in the best possible way. And over a long period of time, that's bad. Because let's say a government official, you become a governor of a state, and what happens is there's an incentive to spend money and borrow money, because at that time, if you borrow money and spend money, people look at how much you're spending, and you can produce a prosperity on borrowed money, and then you leave your term, and then the person next inherits what they have. And so when you're head of the Federal Reserve and you step into the existing job, you have an overly indebted economy that is, and you have a situation where if you just bought government bonds in the traditional way, which is in of itself a problem in a sense, and you just bought that, then you have to allow the other parts of the economy to go broke. And then when thinking about that, you have to then say, what do you do with that? And you have to do it quick, and you have to do it imprecisely. And so the choice that you face is that those companies which were investment grade, all of a sudden, because of the deteriorations in their incomes and their balance sheets, have become junk. And so all of them, a lot of, good quality at one level, considered good quality, becomes junk. And so do you say, oh, I'm not going to provide that money to those? It's just a choice. You have that choice, okay? And you have to think about the consequences of the choice. So yes, it's correct that history has shown that central banks have bought stocks. Central banks have done anything. They will do practically anything and buy practically anything in order to save the system. So you ask what's systemically important, and they'll probably buy it. And therefore you won't have a regular market. And then you as an investor get to make the choice of what do you own. You have that freedom. So what do you own? What are you going to own? You have that freedom.
All right, that was Ray Dalio of Bridgewater advising investors what to do in these unprecedented times. And with that, we wrap up this edition of Countdown. Thanks a lot for watching. We'll be back tomorrow at the same time.